Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be covering the market indexes, my Facebook posts that I posted over on Facebook. I started writing up some articles again over on my website. We're going to be covering 5 stocks I was tracking this week and taking a look at Merrill Edge's research to take a look if they have some more news that I was not tracking this week. So let's go ahead and get into the S&P 500 really quickly. So S&P 500 5-day change up 2 points, so 2.03%, still down for the year by 1.22%. So of course, if you're brand new to my channel, I do make these weekly recaps for historical references. So every week I can take a look at my playlist of weekly recaps and I can say, hey, this week was negative, negative, positive, positive, negative, negative. I like it for just historical stuff. It's weekly change isn't important to long-term investors because whether you buy in at the top or you buy in at the bottom, you can't predict the market. You don't know what it's going to do. You just need to buy. If it goes down, you buy in some more. If it goes down more, you buy in some more. You keep averaging in. If it goes up, great, you're making money. But over the long term, your stocks are going to be going positive because with inflation, most of the stocks, as long as you're making good solid picks or following the indexes over time, they will generally be positive. I've transitioned from a growth investor back in 2005 until 2017. I was a growth investor. I still invested in indexes and single stocks, but 2017 I transitioned to a dividend investor because I wanted cash flow that I could use to buy other stuff, but that wasn't producing as fast. It was a very slow process. The time to research stocks, to buy correctly on dividend stocks, to buy those single allocated stocks that would produce dividends and such, it became kind of, not a hassle, but it was a really, you'd spend a whole night reading a specific 10K on one stock, and it could pan out, it could not pan out. But I turned my attention towards real estate. I went to my first real estate meetup group tonight. I spent 4 hours there. They had a home inspector come out, talk about home inspections. He gave us a discount card. He gave us his number. It was great. Now when I go out there and I buy my first house, I already have my house. When I buy my first asset, my first real estate house, my first rental. Anyways, I can have a home inspection by him. I still have a discount. There's lots of other investors there I connected with. Many of them invest locally. Some invest out of state as well. They know plumbers, electricians, also home appraisals, contractors. They know where they've bought, where they, what's good for them, what's worked out for them. So I talked to people that did commercial, that did rental, single family, some that had duplexes, some that just bought a triplex that was a foreclosure. I talked to so many of them, so I spent 4 hours there talking to all sorts of people and picked their brains. So great. Tomorrow I'm going to another class on Saturday to Than Merrill's fix and flip houses. I just like to listen to what they have to say. It could be repetitive, it could be useful, but it's all knowledge that I could use potentially to benefit me. So it's all free, so I decided I'm going to go. But that is beyond the point for the weekly recap. So let's go ahead and get back into this. So let's see here. Dow Jones up 2.42% this week, down for the year by 2.49%. So Dow Jones is the hardest hit index right now, followed right behind by the S&P 500, and then the Nasdaq is the only one that recently gained their year-to-date positive during this week. So Monday they had, last week they lost more than 6%. I posted a picture over on Facebook of what they had lost last week. So Nasdaq ended last week with a negative 6.31. I bought up the Nasdaq last week. I was gobbling the Nasdaq up. I follow an index. That's what I've been buying lately, is the tech stocks, because I can read tech and understand it a little bit better than I could read, utility companies or anything out there. So I decided to follow that instead. So I followed the Nasdaq. It's up 1.01 over the 5-day change, but Year to date, positive 2.32%. Now, over on Facebook, last week I did post that the NASDAQ it came down by 6.31%. This is QQQ, which just is the standard NASDAQ. I like to track another one that's much more riskier. That's TQQ. It's a leveraged one. I don't recommend anyone even take a look at it. And yeah, unless you want to lose money, right? Apple had reached 164. I actually have Apple pulled up here. And this is one I was really following. So I posted this on March 23rd, which is Friday last week. I was really hoping it would go down into the 150s because I'm invested in Apple. I want to see the stock go down over the short term, of course, but I would like to have averaged down my buy-in price, quite a bit. And if it did dip down into the 150s, that's great. I would have bought more and would have been great. But it didn't. It just stayed around 163, 164, and then came back up, I believe right now at 167. So Tuesday, rumors, people are talking about General Electric might get rescued by Warren Buffett, but there's so many issues with this company. I don't believe Warren Buffett would do it. That would seem like a very risky move for somebody who does very sound investments. Why would you go into something that has so many issues and lawsuits and liabilities and such? That doesn't sound like something that would be, in his best interest. So due to rumors, General Electric did spike up by more than 4% on Tuesday here. You can see here, markets open. Some sort of rumors went out. Man, I wish I could release some rumors. People would listen to me and the stock would fly. You know what? It went up by more than 4%. It came up another additional, like almost 2% on Wednesday, and then kind of simmered down, ending the week up by only 0.97% over the last 5 days. And of course, I did release my stocks with ex-dividends next week's. I have to change the thumbnail. I no longer do 5 stocks because sometimes I put out some really bad stocks. But in this example, what I've been doing is, if you've checked out my previous videos where I use dividend.com, where I use Y charts, you see my whole process. I take roughly 30-40 stocks. I cram them all into Y charts. I have videos on how to access Y charts, how you can get it for free with my financial metrics that I use. I have videos on dividend.com and all sorts of stuff. I'll have those links somewhere in the top right corner during this video. If you click on them, you can check them out. And I've decided that I'm only going to be showcasing stocks that meet my criteria, and I screen these stocks. So I take 30-40 stocks somewhere in that range that are neutral and from very great 5-star rated stocks to 2.4, which is like average, or 3.4, which is average neutral stocks. I screen them for price earnings less than 25, yields over 2, rising revenue, rising net income over the last 10 years, and then they can have free cash flow, or they can have a little bit of negative free cash flow if it's like a financial or something. Negative free cash flow, it could be bad, but at the same time, that's why you look at their 10Ks. Where did this cash flow go? So what I do is I just sort of give a quick rundown of the stock, description of it, ex-dividend, payout, 10 years of revenue, free cash flow, net income, talking about its 1-year metrics here, dividend price, dividend yield, price to book, PE, talk a little bit about it, price earnings in comparison to the stock industry, a little bit more about it. So that's what I do every week. On Tuesday, I'm going to be writing these up. Then I'll be making my video, releasing at 8 a.m. on Wednesday. I'm going to do that. I like writing these up, and it's a lot of fun. I got a couple of emails talking, saying that they enjoyed those articles. So if you guys are interested in checking out my website, you can head over to financial-investor.com. You can actually subscribe to my email list, and all that does is when I write up a new article, you're going to get an email notification in your email that I wrote a new article. It's going to have it right there. You guys can check it out. So that's all it is. I'm not going to be spamming you with anything else besides that. Some other stocks, let's see here, back to Facebook. What else did I post? Amazon down. It was down at a 0.8%. So this was on March 28th. This is Wednesday. They fell down by 6% because Trump came after them saying that they need to get taxed more. Their e-commerce needs to get tightened up. and all sorts of stuff happened to Amazon. Thursday, they opened up. They went down by 2%. They actually recovered and ended up positive by 1%, I believe, on Wednesday or Thursday. I know they came up positive by the end of the week. Let's see here. I actually have Amazon right here. Okay, so they didn't come up positive, but they did come down hard. Okay, so that's actually surprising. I know my friend owns Amazon, and I'm actually surprised at that. Huge loss. Yeah, so Trump had blasted out, I don't know if it was a tweet or something, but he had said that Amazon had been on his list of targeted stuff. If you head over to CNN here, data market, there's an article here talking about the trade crackdown Trump has always promised. And I don't know if this was about North Korea and China and stuff like that. But there was one article I posted. I don't know if this was it, talking about how Trump is aiming. Yeah, here. Why is the United States Post Office losing billions of dollars a year charging Amazon? Yeah, he talked about it. Yeah, he did tweet about it. So that caused their stock to plummet for the 5-day change, down by more than 6%. So it's crazy, crazy how stocks are affected by news like that right now. So Netflix down 3.7%. That's one I was following. Amazon down 6%. General Electric up. We already covered that one. Microsoft was one I was just taking a look at. Now over at Merrill Edge, I'm still signed in. Just want to make sure. There is no current market update available at this time. There's actually a lot that went on this week, which is surprising. You know, the whole Twitter thing with Amazon. Tech stocks tanked on Tuesday, Wednesday, and you can see that here on this NASDAQ here. This is the NASDAQ. So Tuesday, down nearly 3%. Wednesday, down an additional 1%. Friday, it did pick it back up. I did make a great deal between those last 2 weeks. I bought the NASDAQ very cheap and sold it very nicely. And let's see here, what else is going on? You know, Facebook's coming back up regardless of their data leak, which is fine. I don't think they should have fell more than 10%. You know, I could see them falling 4 to 6%, but that whole thing will get recovered. So anybody invested in Facebook, they have a great balance sheet. I don't know if I hold them within the NASDAQ. I actually do hold some of the NASDAQ. I hold an index within the NASDAQ, which I updated my portfolio over on my website as well. Oh, this is my dividends. So I made dividends in March. I actually posted that. So I made $114 in dividends in March. What else is kind of going on? But just little things here and there. So the most active stocks, of course, are GE on. That went down on Friday a little bit, but they sounded a positive. So Bank of America, Micron Technology, down for the week. Quite a bit here. You can see here, week down quite a bit here. I don't track that one myself. If we head over here and just kind of type in MU, we'll see 5-day change down 11.5%. Dang, that's a big loss right there. I would not have been a great happy investor if I bought on the news that this thing was coming on fire. You know, it was on fire. I know so many people that were talking on Jeremy's channel, the financial education. I don't think he was invested in it, but I know a lot of his subscribers and viewers were invested in Micron, saying that he needs to buy into it. If you're buying because, just similar to the crypto whole buzz, if you're buying because somebody says that the stock is hot, that is not the time to be buying the stock. That's a huge red sign. If everyone's like, get into the stock, it's making money, it's going up so fast, you need to jump into this and get money. No, that's a terrible time to jump into it because everybody's already made money on it. So terrible idea. And let's see here. So this is my current portfolio here. Okay, so I did update it. So all I hold right now is Apple and 5 shares of Ford, which I think it may be positive now or almost positive. But I'm going to be dumping Ford. I'm not going to be trying to hold very many stocks. I'm only going to be holding Apple within my Roth IRA and my IRA. I'm still holding Apple for the kind of midterm right now because Apple, I believe, over the short term will bounce back. Right now, I have a buying cost of $169. I believe over the next 3 to 6 months, it'll come back up into the $200 range. And The TQQQ is just the NASDAQ. It's just a leverage NASDAQ fund. Its current unit cost average is 143.92. That's actually, I think that's actually wrong, but let me go check out my activity of where I bought and sold it real quick. I'm going to pause the video. Okay, so here's just a snippet. I crossed out my account names, but these are all. So I was trading the NASDAQ. I was watching the NASDAQ come down. It's currently trading at this specific one. So let's go look up TQQQ. This is a leveraged ETF. I don't recommend anybody buying or even trading this one because this one's very risky. If you're not in and out of it very quickly, or like in a day or so, you can lose a lot very quickly. Just like the NASDAQ last week went down by 6%. If you hold the stock and it goes down by 6%, you just lost 18% of your portfolio. So what I did is after last week's fall, I had bought in on Friday because it fell down by 8%. I bought in around like 137, I believe, I think is what it bounced. It bounced to right around 137. So I bought in at that point, and then it opened up very high on Monday. I don't believe I sold on Monday. I held it because there was much more room for it to grow. But Tuesday, it fell by, over 9%. So I watched this thing fall, boom, hit the bottom. And on Tuesday here, I think this is Tuesday, I made a purchase, yeah, right there on 327, which is Tuesday. So I bought it at 140.39. So 140, so I bought it right here at this endpoint. I bought it right at the end of day. I don't know if it has the timestamp on here. No, it doesn't have the timestamp on that picture. But I bought it at the end of the day of where I thought it may be down. I didn't buy a whole lot of it because this thing's very risky. So I bought $5,000 of it. I bought 35 shares at 140.39 end of day. And I'm still playing with my money. I'm withdrawing money here and there. I withdrew some money out of my cash managed account or my account because I'm funneling money between different things right now. Making offers and all sorts of little stuff, and then the stock tanked even more on Wednesday. So was I really sad that the stock tanked again on Tuesday? Wednesday it fell an additional 3.45%. So this stock's very very rough sometimes. If you're buying and holding the stock for more than a day, it's very risky. So it tanked more on Wednesday by 3.45. So this one, you can see here, it fell below 135. So what I did here is I picked the stock up at 134. That was almost at the bottom. These are limit buys. So I bought it at 134. And then I had like an average buy-in price of around 137, 138 from the prior week and then this week. So my average buy-in cost was around 138, and I rode this thing up until 147.65, and I set my limit sell for 200 shares at 147.65, and this thing triggered here. TQQQ. You can see here for the week on Friday. Actually, this is fine. You can see here on Friday it peaked at 147.65. It hit it during the day, right around this time frame here at 3:10. It's when it peaked, and it sold off my 200 shares at 147.65. Right after that, it fell an additional 3.5%. So I bought this at 137ish, rode it up until so whatever. I had like a 7% gain on this thing overall, and then sold off on it. So that was a great buy, very quick short term, and sell it off very quick short term. So I was able to make a few thousand back on that deal because I had several $1,000s invested in that. You can see that these little, I buy $5,000 at a time, or 6,000. I was buying in increments of 5,000, right around there. And you can see I made back around 30,000. So I ended up making around $5,000 on that sale. So I'm trying I'm trying to quickly collect cash, but this is very risky. I don't recommend anybody actually doing this. So just want to put that out there. There's some risky investors out there that buy and sell that are day traders. I don't consider myself a day trader because I have bought and held for such a long time. But in this current transition that I'm kind of going through, I think these are great times to be swing trading if that is a mentality and you're confident in yourself that you can pull it off. But this could have, I still have room to fall if I wanted to. And you can see here, I do currently hold 8 shares of it. This is actually wrong. These are question marks right now. I'm not sure what the unit cost is on it, but I'm actually positive on it. I think this is just what I pasted in there what's currently at 143.92. Yeah, okay, so what I had done here is actually pasted in what it's currently worth right now in accident. But I only have 8 shares of it right now. If it tanks next week, I'm going to be buying this up again in the 130 range, running it up into the 140 range, and then selling it off. And, this could tank very fast because right now we're trending right along the 200-day moving average, because if we fall below that 200-day moving average, that could cause a massive sell-off across all the, I don't like to, okay, never mind. I don't like to spread negativity because everybody should be investing for the long term. And if you want to invest it for the long term, there's nothing really to worry about. You can take a look at my M1 Finance, and I'm not going to pull money out of my IRA. I'm not going to pull money out of my Roth IRA, my wife's Roth IRA. Those are completely fine. But this money that I have right now that I'm trying to use for real estate, it's sort of play money at this time because I have other reserves, and I think it's just fun to kind of make these sort of deals and have them turn out positive. But there's going to be that time where it's going to turn sideways and I'm going to lose several thousand. So just be aware, it's not all fun and games. So that's basically it for this video. I believe that is all. So of course, I do want to thank every single one of you guys for hanging out with me for the last 22 minutes. If you did enjoy this video, remember to like, comment, and subscribe for future financial videos. I'm going to be putting out real estate videos in the future of my buys. I don't showcase my offers because if I'm offering on a house, I made an offer on a house for $60,000 cash, but my offer was beat by $5,000. That's a pending sale now. I lost that offer, and I don't know. I talked to a lot of investors tonight about that city, and there's people that are buying and flipping in that city, and it's actually really interesting. So I'm going to be looking into that more. I have 2 other offers that are currently in the mix, and hopefully something sticks. Your first couple houses that you're going to be buying, if you're a long-term real estate investor, they're like pancakes. You're going to have a couple burned ones, but as long as you did the numbers and they cash flow, $200-$300, that is perfectly fine if they just cash flow, because once you have a portfolio of 10, 20, 30 houses where some are cash flowing, some are building capital appreciation, and you're going to have a variety of houses in your portfolio. You may need to dump 1 or 2 houses. You'll do a 1031 exchange where you won't have to pay capital gains on the sale of it if you did make anything, and then you can buy a house that does cash flow. So that's all. I've read so many books. I have the Millionaire Real Estate Investor. I have the Real Estate Rehab Investing Bible. I just went to a home inspection meeting tonight. I'm going to a flip, investing fix and flip, and buying your first home seminar tomorrow. That's free, by Than Merrill. He's in town. He's going to be showcasing and talking about giving out some free books. I'm going to that with the wifey. So there's some stuff that's going on this week. Whole weekly recap. I got all sorts of stuff kind of going on. So that's why my videos on YouTube have been a little bit lakey lately, but I will always do my 5 stocks next dividends next week, and then my weekly reviews. I think those are great videos. Kind of recap what happened this week, what's going on next week with the ex-dividend or dividend stocks, because that's still something I like to track. So that's it for this video. If you have any questions, go ahead and leave them in the comment section below. If you have anything to say as far as saying hello, please leave a comment below. I always reply back to you guys. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun only. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. And of course, thank you guys for tuning in. I will see you next time. Have a great day. Bye.